Hello, everyone, and welcome to the Trader's Mindchat show. I'm Mike, and today we're talking about how to stop overtrading. This is a topic that has come up recently within our own group, and part of the question has to do with setting alerts and when to set alerts, what to set alerts on, how to use them, and what to do when there are so many stocks that are setting up. Coming into today, there were a lot of stocks setting up. The most that I've seen in quite a while. We had 12 stocks setting up on our action list. When I went across my social media, it's a lot of people that I follow on X. A lot of them were talking about plenty of stocks that were setting up coming into today. Stocks like Asan, stocks like Reddit, stocks like App and DocuSign. So, how do you focus? How do you focus and how do you know which ones to be placing trades for? How do you know what kind of sizing to do? Should you be trading all of them? What should you do? And how do you avoid getting chopped up? We're going to talk about all that in this episode here. But before we get into that, I'd like you to drop a comment. Let me know that you're here, that you're alive. Let me know that you could hear me okay. And let's get into it. All right. So, step number one for eliminating all of this over trading is going to be to filter your trades. You don't want to start from just trading anything that's out there. The first thing that you're going to want to do is build your universe list. That's the first thing that I'll always do whenever I am starting the week. I always start off with a universe list. So taking the 10,000 stocks that are out there, narrowing it down to maybe about 300 or so stocks that have certain fundamental criteria, stocks that already have certain technical criteria. That's what you want to do. We've done a load of videos on that already, so we won't get into that here. If you do have questions, put them into the chat. We'll go through some of those at the end if you've got specifics on, well, how do you build a filter and that kind of stuff. But step one is filtering your trades. Now, step number two, we've spoken about quite a bit already as well, which is find top quality setups. If you're going to trade, you need to start off with high quality setups. You don't want to just be trading anything that happens to be setting up in some sort of a pattern that maybe you heard on YouTube or X or who knows where. You want to be trading stocks that fit a model book. If you need a model book, there's plenty of great models in my book, The Trading Mind Wheel. We also mention it in the research program. If you're interested in our research program, I will drop a link in there if you're looking for all these stocks that are already pre-sorted, come into the list, and already filtered and placed and are top quality stocks. Step number three, you're going to want to narrow down the stocks that you found that are in these models and put them into an action list. Stocks that are the top quality ones that that meet the already the models. You're going to want to set alerts for those. That's number three. Narrowing down your action list, setting the alerts, and this is what I want to dig into today. So let's go over to a list that we started to build out yesterday. There were a lot of potential setups on this list. Many of them in pullbacks. Many of them were getting nice and tight. Many of them had very good volume profiles, like this one here in QAD, this one here in Duolingo. You could see how it was tightening up yesterday. Good volume off of the 50-day moving average. This one here in AUPH, consolidating around the 21-day exponential moving average, got some lift yesterday. This one here in Mankind was forming a double bottom with a handle. Lots and lots of setups. So when you have so many stocks that are setting up, what do? You've already had your universe list. You already have your model stock setups list, and you still come out with a dozen names that are all setting up. Do you trade them all? Well, my answer to that is to do the following. The first thing that we want to do is to, once we verified that these are indeed quality setups, and yes, all of them were quality setups, what we want to do is set alerts. Set alerts on each and every one of them. The next thing that we're going to want to do is look for volume if any of them were to break out, because we're setting these alerts and we want to look at them in real time. When they break out in real time, we'll be able to see, how is it breaking out? Is there volume on the breakout? Is it a quality breakout? So let's take a look at a couple that actually did trigger breakout levels today. So here's one that triggered a breakout alert at this morning. Hippo. I had set an alert above yesterday's high at $28.52, just a penny above yesterday's high. Price had already gotten some lift off of the 50-day moving average, closed at the top of its range, closed back above all of its other key moving averages. And so looking at it for a follow through could be a potential trade opportunity. So the alert triggered, and it triggered right at the open. And when price triggers right at the open, one of the things that I like to do is check it on the intraday charts. And I really like to look at intraday charts whenever I'm trading alerts. So I'll come down to this 30-minute chart. We'll start here. And price had triggered the alert right at the open. So when price triggers the alert right at the open, there's a couple of things that I want to do. Number one, I want to see, well, is volume coming in? And the way that I check to see if volume is coming in a strong way is this indicator right down here. This is the dollar volume. It's checking and it's letting me know, is volume above average for the particular point in time that it's looking at. So in this case, it's looking at that first half an hour after the market opens. If it's red, like it is now, then that means that, okay, price is down on it. If it's green, price is up. If it's blue, then that means that volume is above average. So was volume above average there? No. Price had broke out, reversed, closed at lows on regular volume. So no trade at all there. So the answer is to wait. And what's happened since then? Price has pulled back more. So this is how setting an alert, seeing what's happening, and then making your decision on what to do can be very helpful for you. The next thing with this, so we're still in step number 3 here, narrowing down your action list, using alerts, monitoring the breakouts, looking for volume. The other thing that I want to do is see how other trades are performing at the time of the breakout, because sometimes the price will trigger an alert and maybe you want to hop on board, even if it doesn't have the volume. Well, what would get you to do that, you might say? If every other trade is also starting to move in earnest, you're taking a look across everything, there's lots of strong action, and this one happens to be crossing the what you've identified as a pivot area first, then that would be confirmation from the overall market as a whole, right? You're taking a look at the other stocks that are setting up. You're taking a look perhaps at the major indexes. And if you're seeing strong action there, then that's part of what would help to confirm, okay, it has wind in its sails. None of that was the case here. While this stock was breaking out, let's flip through some of the other names here, right? And actually, why don't we flip over to a 5-minute chart, and that'll give you an even better sense of how price was moving at the gate for many of these names. And I'll just put my mouse right here so that way you could see how most stocks were behaving. Most of them fell flat right at the gate, right? Not Hippo, but many of them did. So because many of them were falling flat right away, that was another clue. Another clue that said, okay, time to sit, relax, have a cup of coffee, come back and see, does price action improve? Well, now it's a little after 1 o'clock Eastern, and prices haven't really improved all that much. It's still hanging out at the daily lows. We'll see what happens into the close, but so far there's no trades to really speak of yet. Also, actually, let's move on to step 4, right? Step number 4 is to anticipate choppiness. We've been in a market environment that prices have been contracting. There's been less volatility, there's been less volume. A big part of the reason why for that is holiday shortened week. A lot of people are away. Uh, you've had uh, you had a short trading session on Tuesday because of Christmas Eve. Uh, Markets were closed on Christmas Day, and here we are. There's been a lot less volume, a lot less volatility, and so that's part of what has created a number of these setups. If we anticipate the choppiness, then that's part of what will help us to keep our expectations tempered, and we'll also be able to use smaller risk and smaller position sizing. So what does that mean? That means that on any of these trades, come back to these charts and take a look at the daily time frames of these charts. If I'm going to take any of these trades, I want the risk, the entry and the stop to be very tight. The reason why I want it to be very tight is because of the probability, the higher probability of choppiness. If I were to say take this trade in ASAN, let's say that I got in yesterday and I needed to risk 8% on this trade, that's no good, right? Because most trades right now, they're not running very far, if at all. So, what I want to be able to do is to get into trades where my risk is tiny. That way, if it does fail, then I lose tiny, right? Because we don't know which trade is going to be the winner. We don't know which trade is going to be the loser, but we do know that most of the time trades run in groups, right? So winning trades run in groups, losing trades tend to run in groups. You don't know when that trend is going to start. You don't know how long it's going to be. But if you put in a little bit when the trade does start to move and you're risking this much and it starts to work, that's how you could start to lever up. That's what we did in September, October, November, and it's been the strongest quarter of the year, up about 25% on the quarter still. You so much of this game has to do with understanding where you're at in the market cycle. A big part of the way that you're going to understand where you're at in the market cycle is by looking at the trades that are setting up, monitoring how they move, and then sizing accordingly. All this does not require any sort of advanced degree. It doesn't require um, you to be sitting in front of the charts all day. All this is what I've been doing part time, after hours for the most part, for more than a decade. All of it falls within this. Right? Well, let's make this screen a little bit bigger here. All of it falls within this: general market, your system, and personal performance. When you're looking at the market through those three lenses, that's what's going to help you figure out, well, how big should I size? How small should I size? From what I've been seeing over the past maybe about 2.5 weeks, size small, risk off the table, lock in gains, and enjoy the holidays. That's what I've been seeing. With stocks setting up like they were coming into today, you want to be ready because the market can turn at any moment. But when you start to see the prices react like they're reacting here, it says, okay, we wait. We don't need to be the first one on board. Here's another question, and we'll call this step number 5. Wait for trades to gain traction before putting on more trades. So, what does that mean? Let's say that we had 5 or 6 stocks triggering alerts, and let's say that they started to move in earnest. What should you do? Should you be taking all of them? My answer is no. The reason why is because you want to get risk off the table first before recycling that risk into other new trades. The reason why is because what can happen sometimes is you get a bunch of trades that trigger alerts, and then you get a whole bunch of false breakouts. If you've experienced that, go ahead and type into the chat and let me know. I've experienced it one too many times, which is the reason why I have these kind of rules in place, or at least these kinds of guidelines, mindsets, whatever you want to call them. By waiting for, uh, by waiting to get risk off the table, what that allows me to do is if I'm in a trade and it starts to work and it gives me a spot to take risk off the table, meaning get my stop to break even, maybe take some profits, then I'm able to take that risk that I had on that trade that's no longer on the table, take that and then put it into something else. If and only if there is a strong breakout alert, etc. And that's basically it. So let me know what thoughts you guys have, what questions you guys have, and let's get into it. Let's see, we've got a bunch of people over on YouTube. We've got some people over on X today. Somebody over on Twitch. Welcome everybody. Let's go through it. Let's get into it. Alrighty. question about the screening process. Okay, so let's get into the screen. So the other day I did a video on this very cool tool called Deep View. It kind of looks like TradingView, but it's a little bit different. Let me pull up the screen share again, and I'll show you what Deep View looks like. Right, so here's Deep View. This is a tool that I use for all of my screening. And so what I'll do is I'll come into Deep View. I'll run a variety of screens. I've got 9 of them, and I'll run them. I'll run each of them once a week, looking for stocks that are potential sector leaders, stocks that have accelerating earnings and sales, IPOs with strong earnings, IPOs with strong sales, stocks in general. So this could be IPOs versus all the way up to stocks that are 100 years old, that have extremely strong earnings growth, extremely strong sales growth, a very high fund ownership, stocks that pass this rocket scan, and stocks that have relative strength lines that are at highs. By screening for these kinds of things, I'm getting stocks that either are leaders or are capable of becoming leaders. And from there, I'm able to build a universe. When I build out this universe, and the universe right now is over here in Deep View, I'll come over to this list. I'll filter it for a variety of different things. Relative strength at new highs, stocks that are in 3 weeks tight patterns, oops reversal, slingshot, pocket pivots, volume drying up, and high tight flags. I'll sort the universe list based on these, and there'll be all these checks, all these check boxes on here. I'll go through each and every one of them, flipping through them one at a time, kind of like this. And as I see the type of setup that I'm looking for, then I'll move it over to my focus list. And then as I go through the focus list, I'll see which ones of them are action list worthy. Which ones do I want to dive in deeper to? Which ones am I potentially going to put money into? Coming into today, there were a dozen. And for today, none of them behaved well enough to trade. Many of them are still consolidating. I wouldn't really say that any of them, maybe QAD is the only one that's starting to fall apart here. But aside from that, all these look like they are still consolidating. None of them look terrible. Which is basically par for the course for the type of market environment that we're in. Right after the holidays, relatively low volume, relatively quiet price action. It's what we can expect. All right. What other questions do you guys have? All righty. Looks like that is about it for today. So thank you all for being here. I appreciate it. Make sure that you like and subscribe to the channel if you enjoy what we're doing here. And until next time, have a wonderful, happy, and blessed new year. And we'll talk to you again real soon. Take care, much love, and God bless.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.